Alright, so welcome back to another trading video. This is going to be on the new strategy that I've been testing out that I said I would give out for free. It's a recent strategy that I've been testing out and make my life a lot simpler and easier, since I'm going to be very busy with a lot of things next year. So of course it is December, it is the end of the year, the worst time to trade as the markets go still, lots of businesses close, firms, etc. For the holidays. But keeping that in mind, let's get straight into the strategy that I said I'd give out in the last video for free, since it's easy to find, easy to touch upon, and it will make you guys' lives easier as well, since there's a lot of complicated different types of strategies out there, which is you don't need that stuff. So let's get straight into it. So how you actually implement the strategy, it's called a technical strategy, is you go to the strategy tester and you would add a strategy and you look for the one called technical strategy, and then it will implement this whole system with indicators and everything. And if you don't have a lot of time to backtest, this is very helpful, but I recommend you do backtest anyways, because you're going to make your own touches and you need to see how that performs with your own touches. So keeping that in mind, without any of the touches that I've made and the steps that I've made, the strategy states that in the past 243 closed trades, it has a 34% profitability and a net profit of 15.98%. But keep in mind, I did change the risk percentage. I think it's like 0.5%. I don't know per trade. Actually, it's so like confusing. I'm still new to this type of thing with the already implemented strategies with TradingView, but it gives you the average trades. The max drawdown has been in 5%. Now keep in mind, prop firm challenges have a 6% drawdown or 10% drawdown, so you won't even hit the max drawdown even with 243 trades without your own touches and stuff. So you can see the month, the trade to trade performance, and as you can see, there's a steady climb up. We got these quite big drops, but I think this down here on the 91st trade is where we saw that drawdown go pretty far down. Now that you know about that, you can also check the performance summary, list of trades, change the properties. You can go into the settings, and this is where I try to fix the risk percentage and all that, but oh my word, that was confusing. So now if we get onto the actual strategy, I have a picture here I took because I was like, shit, they're not going to see this, it's too small, but so I can just put it over like that and explain to you. So how it works is, obviously I have my checklist, very important. I recommend you always have a checklist. It's an indicator you can get. Mine's by SonarLab. So you can have your risk management there, your psychology steps, and your plan, your trading plan, your rules, your session, etc. So if we get straight into it, if we make it as simple as possible, okay, how it works is you get a signal. Okay, I know, no, signals, please, I don't want to start with signals. I know how it is with the beginners and what we call I forgot what it's called actually. You get the SMC traders and you get the retail traders. So basic retail trader beginners get stuck in this signal buying course bullshit that really tumbles you for the first 4 months. But if you don't have a mentor or anything, so you get a signal with the strategy. Once you implement it, you need to set up your notifications, which I can show you how to do maybe in another video, but very simple. So you get a signal, it's a sell, okay, and your notifications, boom, you get on the charts. The first thing you do your higher time frame analysis, so you can understand where the markets are going, so you can know what your bias is, okay? Because if you don't have a bias and you just take every trade, you're gonna lose. So once you have that high time frame analysis bias done, you go back to the 30-minute. This is your 30-minute is where you're going to be trading with the strategy. It's where you're mainly going to execute your trades with, and you're going to check what the current market structure is, the trend. So if it's obviously been going up for the past week or few days, then you only want to buy. If it's obviously going down for the past few days, you want to sell. but you need to add the higher time frame bias to this so you can try have a understanding of both sides. Okay, the lower time frame analysis and higher time frame analysis. So once you have that, then you have the third step where you check the current market structure, and you're going to look for market structure shift, which is the SMC concept, smart money concepts, whatever ICT concepts you want to call it. Basically, you need to check when the structure of the market has shifted. So let's say from a downtrend into an uptrend, from a high being broken or low being broken. So that to show that the market's changing into your direction, if it hasn't already. So then you execute. But before you execute, what are the two things that you need to do? You need to, number one, calculate your correct lot size, okay? And manage your risk accordingly. Remember, you're calculating your lot size so you know what you're risking. Because if you just say, okay, cool, I'm going to put 3 lots on this. Every trade is different. So every stop loss has different pips. So you can't have this. It's not going to be the same risk every time. So manage your risk accordingly, calculate your lot size, then you execute. Okay, once you've done all the steps that are in your checklist. Then, during the trade, once it hits 1 RR, you want to set your break-even stops. Okay, you set your break-even stops just above your entry or just below your entry if you're shorting, so that you can remove your risk and not worry so much about your trade. So then you just gotta wait for it to hit the TP or SL, the take profit or the stop loss. And yeah, so now I'm gonna show you exactly how the strategy looks like. Now, how this works, okay, like I told you already, you want to do your high time frame analysis, 30-minute trend, check the market structure for market structure shift, and then you execute. Okay, so with this trade, we obviously, the market structure shows that we were going downwards, okay, on the 30-minute. Very simple. My analysis on the high time frame was the same. So then we had a fake market structure shift before we had the proper market structure shift in order to drop to the downside. Okay, so that fake market structure shift was to build up liquidity, take it out, and then have a push to the downside, in which we had the signal, as you can see here. It says a short. I don't know if you guys can see, but it basically says short on the top of this candle, and that's where I entered. Once I've ticked off everything, keep that in mind. So we had a proper market structure shift after the fake out. So you saw this, the structure of the market was going to the upside. Clearly it was starting to go to the upside after the downside, but then market structure changed and shifted, going back to the downside once we had the candle close of this bearish engulfing candle below that low. So then market structure shift occurred, we had the signal, you calculate, you make sure you've ticked everything off, and bam, you enter. Trade hits 1 RR, and you can set break-even stops. I think I extended my TP here, but it came back up, took out the break-even stops, so you would have been taken out at break-even. But that's basically how it works. I'll show you another one now though. Alright, so this was last Friday. I did take this short. I think it was quite early in the afternoon. I thought it was going to be late. Okay, so basically over here we had market structure moves to the upside. Keep in mind on the higher time frame, this is just a lower high being created. Okay, so then we had that market structure and we had the market structure shift. Once it was actually quite a drastic move down, I'm not going to lie to you, but once that candle closed below, we actually got the signal. And then once you ticked everything off, you know, like I did, I entered stop loss. Oh yeah, I didn't mention stop loss is usually at the top of the most recent high or low. So once it was there, I put my stop loss, of course, at the recent high. And once I entered, I targeted the most recent major low. Keep in mind, on the higher time frame, this is a major low. Calling it a major low because these smaller lows are not necessarily higher time frame lows, because it's just, this is the main higher time frame low, and here's the major time frame high. Okay, makes sense. So then price just immediately dropped. This was really not for trades like this to happen. It's never gonna happen always like this. I showed you the last trade, it hit break even and then eventually it went down. So you could have maybe entered again if you wanted, but with this, prices dropped and hit TP. But that's how the strategy works. I really, really hope you understood this, and if you don't, leave a comment, I'll do it again. But yeah, this is the technical strategy that I'm testing out. I still have to record all the back testing that I'm going to be doing from the whole year, to see how the strategy performs. If its performance is better than my last strategy, which is a session sweep strategy that had a 74.35% win rate if you followed all the rules. So we'll see if this can beat that, and as it's much simpler and easier as you get the signal. The last thing I would like to ask you guys is if I should do a part 2 on how to become consistently profitable, as I checked out the last video and it wasn't the best quality. I wasn't as well planned, and I would like to do a part 2 if you guys really like that. More in-depth one and more simple for you guys to understand. All right, thanks for watching.